You just had your worst trading day. Maybe you revenge traded, maybe you ignored your stop, maybe you sized up when you shouldn't have, and now you're just staring at the P&L that makes you feel physically sick. And right now the only thing standing between a bad day and a blown account is what you do in the next 24 hours. And most traders, they get these parts completely wrong. So here's the exact protocol I follow and that the most profitable traders at Phidias Propfirm follow after a brutal day. No motivational nonsense, just the concrete steps that stop one red day from becoming one bad week. So if you're ready, let's break into it. So first of all, let me be real with you. I've had days where I just closed my platform and genuinely didn't want to look at the chart for a week. And days where I make every mistake I teach people to avoid. But here's what I learned the hard way. And the damage from a bad day almost never comes from the bad day itself. It comes from what you do after. The revenge session the next morning, the oversized trade to make it back, and the spiral where your identity becomes your P&L. And at Phidias, we've looked at data from over 19,000 traders and there's a clear pattern. The traders who fail evaluations rarely fail because of one bad day, but they fail because of what they do in the next 48 hours after this bad day. So let me walk you through the exact protocol. 4 steps in order so that if today was your worst day, tomorrow doesn't have to be. So step 1, the immediate shutdown. So shut it down and completely. And I don't mean take a break and come back in an hour. No, I mean you close your freaking platform and you close your broker tab too and put your phone on do not disturb and walk away. And here's why it matters more than you think. After a major loss, your brain is flooded with cortisol and your decision making is compromised, not partially, but fundamentally. Studies in behavioral finance show that after a significant loss, traders become up to 3 times more likely to increase risk on their next trade. And not because they've found a better setup, no, it would be awesome, but because they're emotionally hijacked. So the first rule of this protocol is non-negotiable. You don't make a single trade decision while you are still emotionally activated. And I'll be specific. Don't review your trades yet. Don't journal yet. Don't even open your performance dashboard. Just stop it. Stop. Shut it down. You'll have time for that, but not now. Right now, your only job is to create distance between the loss and your next decision. So for that, go for a walk, hit the gym, cook a meal, do something physical that gets you out of your head. And the analysis comes later. The discipline starts right here, right now. Step 2, the forensic review, but not when you think. This should happen the evening of your bad day at the earliest. Or the next morning, but not 5 minutes after you close the trade, alright? So the timing matters because you need enough distance to be honest with yourself, but not so much that you've forgotten the details. So now here's the key. This is not a therapy session. This is a forensic investigation. You're not asking yourself, why do I always do this? That's emotional. You are asking very specific clinical questions. Here are the 5 questions I go through every single time. And I write down the answers and not type it, alright? So pen and paper. First question, did I follow my rules? Yes or no? And not mostly, kind of, no. Binary, yes or no. Second question, if I broke a rule, which specific rule did I break first? And there's always a first domino. Maybe you entered outside your session, maybe you skipped your pre-market checklist, maybe you moved your stop. Find the first domino, alright? That's what you fix. Third question, was this a strategy problem or an execution problem? If your setup was valid and the market just didn't cooperate, that's completely different than abandoning your plan mid-trade. One requires patience and the other requires discipline work. So don't confuse the two. The fourth question is, what was my emotional state before I traded? And not during, before. Were you bored or frustrated from yesterday or trying to hit a target, or most blow up days start before the first trade is even placed? And the fifth and the last question is, if I could rewind to the start of the session, what's the one thing I would change? Not 5 things, but only one. Which one it would be? That's your action item. So write it down, everything, put it next to your screen, and that one thing becomes your focus for the next trading day. This is how you're making improvements in your trading. Then the next step, and the step number 3, and this is the one nobody talks about. Decide whether you should trade tomorrow at all. This is where discipline separates amateurs from professionals. Because most traders assume they should trade every day. That's not discipline, that's habit. And after a bad day, habit is really dangerous. And here's I'm going to give you my go, no-go framework. And I ask myself 3 things. The first question is, how far am I from my drawdown limit? For example, if you are on a Phidias evaluation or a funded cash account, you know your maximum drawdown. Normally you should know it. And that's your hard number, because you cannot go below this max drawdown. If yesterday's loss put you within 40% of that limit, you need to seriously consider sitting out, or at minimum reducing your size significantly. So the math doesn't lie. When you're close to your drawdown floor, the risk-reward of trading shifts against you, and protecting capital becomes more valuable than generating profit. The second question is, can I honestly trade at reduced size and be okay with it? So because here's the trap. You tell yourself, I'll trade small tomorrow. Then a perfect setup appears and you think this one's different. I need the full size to make back what I lost yesterday. And if you cannot genuinely commit to reduced size, you shouldn't trade at all. At all. And that's not weakness, that's self-awareness. Third question, is the market environment the same as when I built my plan? Because sometimes your bad day happened because the market regime shifted and you didn't adapt. Volatility expanded, ranges changed, trend turned into chop. And if the conditions have changed, it doesn't matter how disciplined you are, your strategy might not be the right tool for the current environment. And if you answer no to any of these 3 questions, the professional move is to take the day off. Watch the market if you want, study, review, but don't trade. Because the day after a loss is not quitting. It's capital preservation in its purest form. And by the way, at Phidias, there's no minimum daily trading requirements. You have the freedom to step back when you need to. Because we know that the best traders aren't the ones who trade every day. They are the ones who know when not to. And the next step, and the last one, step 4, and this is the hardest one, separate who you are from what you lost. I see this constantly, especially with new world traders. They have one bad day and suddenly they are questioning everything. Oh, maybe I'm not cut out for this. Oh, maybe I should quit. Maybe I was just lucky before. But let me tell you something from experience and from working alongside some of the best funded traders at Phidias. Every single one of them has had a worse day. Everyone. The ones putting consistent payouts, the ones who passed their evaluations on the first try, and the ones with 6-figure funded accounts, they have all had a day where they wanted to quit. And the difference is, they didn't let one day rewrite their entire story. And here's a practical way to do this. After your forensic review, I want you to open your trading journal or your performance log and look at your last 30 trading days. Not your last day, your last 30 trading days. Because here's what you will almost always find. One bad day in the context of a month is noise. It's not a pattern, it's not a verdict on your ability. It's a data point. And now if you see the same mistake repeating over 30 days, that's a different conversation. And that means there's a process issue to fix. But a single bad day, even a terrible one, doesn't define you as a trader. Your identity is your process, the way you prepare, the way you manage the risk, the way you respond to adversity. That's who you are. And if you're following this protocol right now, after your worst day, you're already proving that your process is stronger than your worst loss. So let me recap the protocol. Step 1, shut it down, create distance, don't trade and don't analyze until you're emotionally regulated. Step 2, conduct a forensic review, 5 specific questions, write them down and identify the first domino and your one action item. Step 3, make a go, no-go decision for the next day. If the conditions aren't right, sit out. Capital preservation is a strategy. And step 4, and the last one, zoom out. Look at 30 days, not one day, and separate your identity from your PNL. You are your process and not your worst trade. This is the protocol, not motivation, and not just believe in yourself. You can do it, but a system for handling the hardest moments in trading. Because those moments are where careers are either built or destroyed. And if this video gave you something real, something you can actually use it, hit the subscribe button and the thumbs up too. This is the Phidias Propfirm YouTube channel, and every video that we put out and every live stream too are just designed to make you a more disciplined, more consistent and more profitable trader. And if you're ready to prove yourself in a Propfirm that respects serious traders, that gives you a frozen end of day drawdown, no daily loss limit and the freedom to trade your way, check out Phidias Propfirm and of course use the code PPTV to get the best discounts available on evaluations and one-time payment accounts on Express to Life, Premium Fundamental and 10K Drawdown Challenge PPTV. The link is in the description. I'll see you in the next one. It was Florent Trader or in live stream from Monday to Friday. See you later. Take care. Trade safe. Bye bye bye.
Money talks, future markets breathe fire. Locked in the charts, pushing limits, taking it higher. Roll the dice on contracts, no casino, this grinds trust. Risk reward combo.